Joining us now to assess the state of the macroeconomy is Avinash Persaud, Senior Fellow of Peterson Institute of International Economics. He joins us from the sidelines of the Elara Global Investor Conference that's currently underway. Avinash, good morning and thank you so much for taking the time out and speaking with us. The big theme globally that everyone's talking about is the strength that we've seen in the dollar, and that's actually caused a huge sell-off across emerging market currencies, whether it's the Brazilian real, whether it's the Russian ruble, the naira, but surprisingly the rupee has remained resilient. What could be the reason for that, and what's your own assessment of whether the rupee will be saved the blushes?
Well, good morning. It's a very important question. Mario Draghi has made life quite difficult for Janet Yellen. He's triggered this strong dollar appreciation around the world with easier European monetary policy, expectations of tighter US monetary policy down the road. And as you say, this has led to weaker emerging market currencies around the world, very broad-based weakness. But of all the emerging market currencies, the rupee is the best performing. I think there could well potentially be a significant revaluation of the rupee going on. The rupee has always been at a competitive rate in terms of price competitiveness, in terms of whether goods are cheap here or abroad. The problem for India's trade accounts and current accounts has been our non-price competitiveness. All the barriers to trade, the barriers to exporting, the barriers to doing business and making things in India. And I think the belief that this government is tackling some of those barriers is leading to the potential of a revaluation of the rupee. So bucking this trend could continue for a while.
Okay, so where do you see the rupee then in 2015 itself? Do you see it depreciating under the pressure of a strengthening dollar at some point in time, if not now? Or do you think this continued delta, appreciation in delta, whatever its intrinsic value, is going to be the story of 2015?
I think the easier call is how will the rupee behave relative to other emerging markets. And I think that is that the rupee will continue to be one of the best performing currencies. Very important for investors who tend to think in terms of blocks of assets, and so the block of emerging market assets, the rupee the best performing. Whether it's still able to outperform the dollar in a strong dollar environment is going to be a tough one. And I think the Indian authorities are going to be nervous about a strong rupee. They're going to be nervous that this will unsettle their plans for boosting manufacturing. We've already seen the RBI quite keen or quick to ease monetary policy wherever it has the opportunity to do so. And so I think that's going to make it hard for the rupee to appreciate against the dollar, but it will be the best performing emerging market currency.
Okay, let me ask you the most uncommon question today. When will the Fed hike rates?
I think the key to investing in financial markets is not that question.
Okay.
The key is to know whether the Fed's going to be early or late, whichever month it is. And I think there are a number of reasons to be certain that they're going to be late. The politics is against them moving early. The absence of inflation, concerns about the strength of the recovery, its broad-based nature, employment and wages, means that whichever month it is, the pace of tightening, the timing of tightening is going to be late rather than early.
Will it be disruptive when it happens, September, October, November? Will it be disruptive, and what will be the disruption?
The markets aren't going to look at just the timing. It's going to be the level of the rate rise and the accompanying statement in terms of the indication of whether this is the first of many moves or the first move and then a pause. And so it's a very complex set of thinking that will come out from that first move. And so the issue is whether you put all that into context, the pace and the strength and the timing. Are the Fed being ahead of the curve, ahead of inflation, or perhaps being too relaxed and behind? And my bet is they're going to be too relaxed and behind.
Okay. For the benefit of our viewers, Avinash, if you can give us your assessment of the rally that we've seen in the financial markets as a whole, because this is a very unique situation where most markets globally, equities that is, are sitting at fresh highs, whether it's India, whether it's Japan, which is at a 15-year high, the S&P 500 at a record high. Do you reckon that these flows and this abundance of liquidity could continue to get flushed into equity markets? And what are the pockets that look like they could outperform now?
So there are two fundamental forces that have driven equity markets higher. The first is the fact that we have very low interest rates around the world. And when people are discounting the earnings of corporates, the discount rate they're using are very low levels of interest rate. And that means that small increases in future earnings means big price positive moves today in stock markets. Now, those low interest rates are here for a while. Yes, the Fed may be starting to tighten, but the Japanese, the Brits, the Europeans are not really yet doing that, and rates are going to remain low. The second big force has been a sense of risk reduction. The U.S. economy may not be running at a very fast rate, but the threat of unemployment has fallen, and that should support consumption. In Europe, the threat of a currency crisis, of a credit crisis, of the euro itself unraveling, that threat has fallen. In Japan, the threat of deepening deflation has fallen. Risk reduction has driven the equity markets higher, and I think those risk reduction ideas will continue for a while.
Okay. Well, let me end with a question that's suddenly dominating our newspapers about the Reserve Bank probably not regulating the government securities market and debt itself, merchant selling of government debt going to another organization. I don't know if you study a lot of central banks, you address central bankers frequently at the G20. Do you study economies where there is so much of repression that banks have to buy government securities with about 25% of their deposits? I don't know how it compares with all that you study, but is it a good idea in India itself to bifurcate these markets from the Reserve Bank?
Well, I think that the recommendations of the FSLRC are very much along the right lines. I think some separation of powers, some identification of priorities is a good thing in the long run. I think one has to be, I got quite heavily involved in policy advisory during this financial crisis. And of course, in the crisis, there's no real separation. The central bank, the fiscal authorities, the debt authorities have to work as one. And so whilst we need to prioritize different things during the good times, we need to make sure we don't create silos that make it very hard for absolute cooperation when the time requires that.
Fair point. That's of course the start of a big discussion. We can't do that now. Thank you very much, Avinash Persaud, for joining us on a range of topics.